Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar extended its bounce on Friday and posted a fresh daily high near the suggested objective, which was around 60.65 before reversing after the market reaction to the mixed US jobs data. The US Labor Department closely watched employment reports showed the non-farm payrolls, or the NFP, increased by 315,000 jobs last month compared with the expectations of 300,000 jobs. The employment rate, however, rose for the first time since January to 3.7%, while the average hourly earnings rose 0.3% compared to the estimate or the forecast of 0.4%. Looking ahead this week, we have a wealth of economic data, and all eyes point to the RBA rate decision on Tuesday. Then also we have the Australian GDP. Along with that, we've got the ECB rate decision and also the RBA Governor Lowy and the US Fed Powell's speech as well. So no doubt it will be another volatile week. That said, though, looking at the technicals, we are pointing down, and that is towards 67.35.40 as a potential target, and the base, where I feel is a strong foundation for the bulls, around 66.80, and expect a bounce like previously seen that we saw back in July. In light of the pattern, any upside test may again struggle towards that 68, 60, 65 area. So I feel the bears will continue to weigh on the support for the start of this week as the US dollar, which measures the greenback strength against a basket of 6 major currencies, increases after closing around 109.55 on Friday. This has put a further weight on the euro as it now looks towards the key level at 98.80. With the technicals rather heavy, could see a break, or I feel there may be, and that would expose the region of 96.35 to 70. But do be on your guard though, because this week is the ECB rate decision, and it is expected a 75 base point rate hike, which will see a move from 0.50 to 1.25. That is on Thursday at 10:15 p.m. Sydney time. It could give opportunity towards that 96 area if we see a break, because the dollar index is getting a little bit somewhat overextended after closing above 109. The calls to 111 and may see a strong rejection from there due to the risk events this week. As the market continues to focus on the top side for dollar yen and levels last seen in 1990, we did see back then the Bank of Japan conduct an intervention, and is most likely again expected as we move closer towards this objective around 141. If there is an intervention, then we could see a very much to a bear case and a sharp downturn to the 137.5 area. Although the opportunity is around this region, it still be on your guard in case we get a squeeze anywhere from 141 maybe to 143. But as I mentioned, the Bank of Japan is eyeing monetary levels and therefore could see that intervention occur. Sterling still a little bit somewhat oversold, but the close under 115.45 has now put a 111 to 113 objective in place, and as you can see, the bears are still weighing heavily on this market, even though the ADX is overheating and the RSI is extremely oversold in all time aspects of daily, weekly and monthly. So I do feel that we are going to get a very sharp reversal or correction soon. Finishing up with gold and oil, where you can see the market is attempting to recover since rebounding in front of that level of 1,680.90 area. If we get a close above 1,719, that would see or support a short squeeze up to 1,742 to 44. Until we get that close above 1,719, then the bears will weigh until we reach that downside support of 1,680 and reassess. Looking at oil, well, the market has posted an inverted hammer from $86 a barrel and is currently in a short-term correction as it looks towards the top side now, which could be anywhere as high as $91.30.40 as eyes look to OPEC this week. In light of the pattern, I do feel that we are clearly seeing a good bullish foundations from this level here, so therefore does support a further climb. But I would like to see the RSI and the MACD a little bit stronger to support the inverted hammer, and therefore would support that challenge to $91 a barrel. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the news report. I hope you enjoy the great start to the new week.